Hello everyone and welcome to today's session. I'm your speaker for today's webinar. My name is Abhirami and I am the Client Engagement Coordinator here at AMCA. And together with me, Ms. Cheryl, Supervisor at AMCA, and Mr. Naveen, Managing Director and Co-founder of AMCA. For all new joiners in this webinar, I would like to give a brief introduction of our company. We are from AMCA. We are an auditing firm in UAE with a decade-long experience. We are registered with the Ministry of Economy to operate as a licensed auditor and the tax agent from the Federal Tax Authority. So today, as we talk about tax group provision and their condition for tax group registration. After the discussion of this topic, you can drop all your question on our chat box. So without any other further delay, we can start our webinar. Okay, today we are going to discuss about tax group provisions. Under this, we will discuss tax group provision, tax group, sessions of a tax group, taxable income of a tax group. First, we will move to tax group provisions. It means the provisions concerning the formation of a tax group between a resident person and one or more resident juridical persons. A tax group for corporate tax purposes is different from a tax group for VAT purposes. Okay, now we are going to discuss about tax group for parent company. A parent company could make application to the authority if the company met the following conditions. The first condition is the resident persons are juridical persons. The second condition is the parent company owns at least 95% of share capital of the subsidiary, either directly or indirectly through one or more subsidiaries. The third condition is the parent company holds at least 95% of subsidiary profit and net assets, either directly or indirectly through one or more subsidiaries. The next condition is the parent company hold at least 95% of voting rights in subsidiary company, either directly or indirectly through one or more subsidiaries. The next condition is neither parent company nor the subsidiary company is an exempt person. Also, neither parent company nor the subsidiary is a qualifying free zone person. The last, the both parent and subsidiary have the same financial year. Also, the last condition for the tax group registration is the both parent company and subsidiary company should prepare their financial statement using same accounting standards. Okay, if the parent company and subsidiary company meets this condition, they can proceed with the tax registration. Now we can see what are the common conditions for tax group. Tax group registration. One or more subsidiaries in which a government entity directly or indirectly owns 95% can form a tax group, but it's all subject to the condition prescribed by the authority. The next condition is a tax group treated as a single taxable person, it represented by the parent company. And the next one is the parent company shall comply with all obligation on behalf of tax group. And the next condition for the parent company and subsidiary company shall be liable for corporate tax payable by the tax group for those tax periods when they are members of the tax group. And the next one is the tax period can be limited to one or more members of the tax group, but it's all approval by the authority. And the next condition is the parent company and each subsidiary company shall remain responsible for all complying. And the next condition is a subsidiary company can join the tax group by submission of a application to the authority by the parent company and the relevant subsidiaries. The next condition that for leaving a tax group and the subsidiary company should meet some conditions as well. The first condition is if the relevant subsidiary no longer meets the condition to be a member of tax group. And the second condition is by the approval of the authority of an application by the parent company. Also, the tax group shall be seized by the following conditions. The first condition is the approval by the authority of an application by the parent company. And the next condition for seized tax group if the parent company no longer meets the condition to form a tax group. That means if a parent company is not meeting any of the condition I mentioned above. Also the next condition is the parent company can replace with another company without discontinuation if they meet the following conditions. The first condition is the new company meet the condition relating to the former condition. And the second condition is the former parent company ceases to exist. The new parent company or the subsidiary is its universal legal successor. If the company meets these two conditions, then the parent company can be replaced. The last condition for the tax group is for authority discretions dissolve a tax group or change the parent company. If a tax group, it will be notified the parent company for such action taken. Now we are going to discuss about the date of formation and session of a tax group. It means tax group will be formed from the beginning of the tax period, specified in the application submitted to the authority. However, the authority has the right to determine another tax period that a tax group may be formed. In case a subsidiary leaves the tax group following approval by the authority, the subsidiary shall be treated as leaving the tax group from the beginning of the tax period specified in the application submitted or any other tax period determined by the authority. The same applies in case a tax group ceases to exist following approval of an application made to the authority. Also, the relevant members of a tax group shall be treated as leaving the tax group from the beginning of the tax group shall be treated as leaving the tax group from the beginning of the tax period. Now we can move to our last topic, taxable income of a tax group. That means taxable income will be calculated for the group that the parent company shall consolidate the financial results, assets, and liability of each subsidiary with the parent company for the relevant tax period, thereby eliminating transaction between the members of tax group. And the second relevant provision of degree law shall apply as the context requires to the tax group. And the third point is unutilized tax losses of a subsidiary that joins a tax group shall become carry forward tax losses of the group and be offset the taxable income of the group in so far this income is attributed to the relevant subsidiary. Also, new subsidiary joins the tax group. Unutilized tax losses of the existing tax group cannot be used to offset the taxable income of the tax group. In so far, income is attributed to the new subsidiary. If subsidiary leaves a tax group, tax losses of the tax group shall remain within the tax group utilization of pre-grouping tax losses or the utilization of tax losses of the relevant subsidiary. On sessions of a tax group, utilized tax losses of the tax group shall be allocated as follows. In case the parent company continues to be a taxable person, the tax losses will remain with the parent company. Or in case the parent company ceases to be a taxable person, the unutilized tax losses shall not be available to offset against the future taxable income of individual subsidiaries. The next point is any income that was considered with the regards to a transfer shall be considered on the date the transferor or transfer leaves the tax group within 2 years of the date of transfer unless the associated income would have been exempt from corporate tax or not taken into the account. The last point is the tax group must prepare consolidated financial statement in accordance with accounting standard applied in the state. Now you can post your questions on our chat box. We will be answering soon. Thank you everyone for your valuable time. You can contact us through our website or our landline number for any concerns. See you all on next week. Thank you.